Good afternoon, everyone, and welcome to our webinar on service tax on incentives and discounts to dealers. Today's webinar deals with a very prevalent issue in the industry, and that is of provision of discounts and incentives by manufacturers to dealers. We are organizing this seminar basically because this transaction has come into the limelight recently due to the show cause notices that are being received by basically automobile dealers, which are alleging the imposition of service tax on incentives and discounts. So we'll be talking about whether these allegations hold any water or not. The flow of our webinar will begin by giving you a brief background as to what are these transactions, how do discounts and incentives flow to begin with, what are the department's allegations. Then we'll move on to what is our take or our understanding of the legal provisions surrounding these transactions and whether these allegations hold any water to begin with. We'll also deal with the implications of these transactions or the GST implications of these transactions. We'll then move on to suggesting proper ways in which we can cement our tax positions and prevent litigations or prepare for litigation in this matter. At the end, we'll be open for questions from your end, and we'll try to answer as many queries within the time permitted. Moving on, first we'll talk about what are these transactions. Basically, the underlying transaction are of two sales. A sale of manufactured automobiles or manufactured goods from the manufacturer to the dealer under the cover of a tax invoice, and then subsequent sale of these goods by the dealer to the customer, final customer. As we know, especially in the automobile industry, it is a very cutthroat competition there. So dealers in regular business always offer a lot of discounts to customers by reducing the price in which they are selling goods to the customers. This discount in turn is being reimbursed in many cases wholly, in some cases partly, by the company, that is the manufacturer. The other kind of transaction is that manufacturers themselves offer discounts in the form of incentives, and they are always linked to some sort of target, mostly related to number of goods sold or goods purchased. And these are the two kinds of transactions and the two kinds of discounts that are prevalent in this industry. As I said, the first one is a target-linked incentive, and the second one is reimbursement of discounts which are given away to the customers. Target-linked incentives are of various kinds. They come under various kinds of nomenclature. But just for the sake of illustration, we have for automobile dealers, we have incentives like early bird incentives, where a certain amount of incentive is given or discount is given if the dealer is able to sell a number of cars within a stipulated time period, or by wholesale schemes where wholesale targets are set down by the manufacturer, upon achievement of which incentives are provided. Moving on, now we have to understand, to come to the point as to why the department has so much issue in this, we have to understand what is the industry practice that is being undertaken by dealers all over the country. So these discounts are basically post-sale discounts. They are given by the manufacturers or the company to the dealers by issuance of a credit note, with or without the incidence of VAT. The dealers in their books sometimes treat these as purchases by reducing the amount of their purchases or by treating them as other income. Similarly, on the other hand, the manufacturer reduces its sales turnovers basis the credit notes that it issues. All over the country, no dealer or most dealers do not discharge service tax on these discounts and incentives that it receives. And this is the bone of contention with the department. Moving on to the department's allegations and how does the department's allegations stem. This issue, sadly, is not a very novel issue. It dates back to the positive list regime also. In the positive list regime, the demand used to be raised under the garb of business auxiliary service. That is promotion or advertised marketing or sale of goods produced, provided or belonging to the client. Now, several cases came up before the tribunal, and the tribunal outrightly rejected this demand, saying that these are goods belonging to the dealer. They are not providing any service of advertising, marketing of any other person's goods. Now, one would understand that the department would sit back, based on these tribunal decisions, but under the negative list regime, the department is pursuing this matter with greater fervor by demanding service tax. Mostly because under the negative list regime, the entire point of different heads of service tax has been done away with, and we have a larger taxable event like the declared services. To understand how the department is proceeding, first the department is saying that there are two separate transactions. This is not a sale transaction or a part of a sale transaction. These are post-sale transactions that you are undertaking, separate from the original sale of goods. Second, the department is now trying to expand the definition of service and saying that it is an activity that you are doing for a consideration. It is also trying to identify what is this activity. It is saying that this activity is priority sale or preferred sale of certain models based on directions given by the manufacturer. This is not something that dealers do regularly in their course of business or something that they would do if the manufacturer did not direct them to do these. And lastly, the most important point is declared service under 66E of the Finance Act, which says that under which the department is saying that the dealer is agreeing to an obligation to do an act. And what is this act? There are two kinds of act that is being alleged. One is reduction of the price of the goods that is being sold to the customer. And second is that the dealer is agreeing to achieve targets or agreeing to undertake activities based on the directions of the manufacturers. So these are the two obligations of acts that the dealer is undertaking, for which discount and incentive is the consideration that is being given by the manufacturer. So this is the entire crux of the department's allegations, which are coming forth in the show cause notices. Now, Puneet will take us through what is NITYA'S take based on legal provisions surrounding this issue, the jurisprudence that has been established, and how has the court dealt with such issues in the past or will deal with it in the future.
Thank you, Sneha, for explaining the whole issue in a very crisp way. And good afternoon, everyone. Thank you for joining in that large number. So we have many car dealers, two-wheeler dealers, main auto and consumer durable companies joining it. And the issue assumes importance not only from a service tax perspective, but GST perspective also. And because many of our clients were getting show cause notices and summons, so we thought that we should organize this webinar. So before I proceed further, it is very important when we deal with a legal issue that we understand the underlying facts clearly. So as long as we are able to decipher a transaction properly, what is it, then the application of law becomes much more easier. And the issue in hand which we have that has linkages with other laws as well, be it income tax law, it has a linkage with how we treat such transactions in accounts. So to that extent, this is a very important issue which has ramifications both under service tax and GST law, and has linkages with other laws as well. Proceeding further, we'll be discussing the legal provisions. We'll firstly discuss what should be the accounting and TDS treatment of such transactions. We'll discuss the treatment under Finance Act, namely the service tax. So, as Sneha explained, so we have an underlying transaction that, say, a car company sold the car to its dealer for 10 lakh rupees, and thereafter there can be multiple commercial considerations ranging from meeting a target to early payment, etc. And say, for example, that the car company gave a discount of 1 lakh rupees to the dealer. So the important aspect to understand is, are these two transactions or these are one transaction? Was the dealer undertaking some distinct activity for the car company, or this needs to be seen in an integrated manner only? If we come to the accounting and TDS treatment, we have in AS 18, which deals with revenue recognition. This clearly provides that the revenue has to be measured at fair value of consideration after taking into account trade discounts or volume discounts or volume rebates given by the entity. So in our example, if the car company has given a discount of 1 lakh rupees, then it will recognize revenue of 9 lakhs, namely 10 lakhs minus 1 lakh. Now let's see from the dealer's perspective, we have Ind AS2 dealing with the inventories. So from a dealer's perspective, the accounting standards provide that trade discounts, rebates, and other similar items are deducted in determining cost of purchase. So when the dealer is drawing up its books of accounts, its cost of purchase will be treated as 9 lakhs only. From a TDS perspective, the relevant provision is TDS is deductible on commission under section 194H. So the first issue which comes into consideration is when the company has passed on the discounts to its dealers, whether such discounts are in the nature of commission and they are liable to TDS. So the underlying transaction between the company and dealers is on principal to principal basis. They have come together to buy and sell goods. There is no service which dealers render to the company. Consequently, there should not be any TDS under section 194H of the Income Tax Act. However, under income tax laws, there are adverse jurisprudence also, which says that TDS has to be deducted, but legally this is not applicable. Proceeding further, Finance Act 1994, which deals with levy of service tax and which is directly relevant for the present show cause notices which are issued. We have the definition of service. So from July 2012, the service has been defined in the widest of the manner. Any activity carried out by a person for another for consideration. So instead of having a positive list, now it is negative list that any activity for a consideration qualifies as a service. The definition specifically excludes declared service, a very important exclusion. So the definition of service says it shall not include an activity which constitutes mere transfer of title in goods by way of sale. So for the purpose of levy of service tax, if there is a transaction related to sale of goods, that will be out of the purview of the levy of service tax. Now, applying this definition of service to our transaction, the car company sold car to the dealer for 10 lakh rupees. Car company said, okay, if you buy 100 vehicles from me, I will give you a discount of 1 lakh. Therefore, both the transactions of initial sale and subsequent discount are part of integrated transaction of sale of goods only. Therefore, it should be outside the purview of definition of service. Then we have negative list service. There is an entry dealing with trading of goods. So if any transaction constitutes to trading of goods, which is there in the instant case of sale or purchase of vehicles, that is also outside the purview of service tax. Then lastly, the declared service entry, which deals with agreeing to the obligation to refrain from an act or to tolerate an act or to do an act. So if the instant activity qualifies for agreeing to an obligation to do an act, then it will qualify as a service and subject to service tax. But in our view, the first two exclusions are more than sufficient, being transfer of title in goods or trading of goods, to take out the instant discounts out of the purview of service tax. But somehow the service tax authorities are not agreeing to this stand. Proceeding further, almost 40 years back, this issue came up before Supreme Court in respect of a VAT case. When a seller passes on trade discount to a buyer, whether it is deductible from sale price of the goods, In that case, the VAT authorities were contending that the discount which is passed on is for an independent activity, which Supreme Court clearly rejected. The Supreme Court held that concession in price by way of an additional incentive to promote own trade qualifies as a trade discount and is not a service charge. The court further held that if discounts are given in regular trade and in accordance with the terms of contract or agreement, then they will qualify as trade discounts. The treatment of transaction should be established from the books of accounts, whether it qualifies as a discount or not. So even though this jurisprudence is in respect of sales tax or VAT laws, this sort of jurisprudence is equally relevant even today for determining the true nature of the transaction. Proceeding further, so whether dealer discounts are exigible to service tax. In the positive list, we used to have an entry of business auxiliary service, which covered promotion or marketing or sale of goods. So the issue came up on numerous occasions before tribunal. Tribunal held that service tax and VAT are mutually exclusive. Tribunal further held that the relationship between the company and dealer are on principal-to-principal basis. They negated provision of any service between the dealer and the company. They said that these discounts are given by the company to promote its own sale. And lastly, the tribunals concluded that these are in the nature of trade discount and not business auxiliary service. So again, yes, this jurisprudence becomes handy for fighting the present litigations as well. But as we highlighted that earlier, there used to be a specific entry of promotion or marketing or sale of goods, whereas presently any activity for a consideration is treated as a service. So our take is, as far as these transactions are concerned, there is no promotion or marketing activity which is, or promotion or marketing service which is provided by dealers to the company. Therefore, the service tax demand on most of these discounts, be it quantity discount, early payment incentive, etc., etc., this should not be tenable. But yes, the departmental authorities already issuing show cause notices, already taking a stand, we need to fight it. More so because this issue assumes importance under GST law, so we should handle these litigations with best of our ability. But yes, there can be some transactions which can be subject to service tax. So number of times there are JPS schemes like joint promotion, joint advertisement schemes where the dealer may incur a loan mela, etc., and share part of the expenses with the main company. We have got certain questions on balance scorecard, etc., which various car companies are giving. So if there are reimbursements, discounts, or incentives not relatable to sale of goods for independent activities, etc., then yes, such transactions may attract service tax. And yes, now we come to the implications of these transactions under GST regime. So I'll again hand over the session to Sneha to run us through the GST issues arising out of these transactions.
Thank you, Puneet. As Puneet correctly expressed, there is a lot of apprehension that with the end of service tax, this issue will not end. And this is mostly because of the way the provisions under GST has been worded and how the department will interpret these provisions to its favor. So we'll first take a look at the relevant provisions under which allegations can be raised for similar transactions. Now we know that GST is a levy on the supply of goods and services. And the valuation of these goods supplied are determined under section 15, that is value of taxable supply. The value of taxable supply, as we know, is the transaction value, that is any amount paid or payable by the supplier, by the recipient. But it has certain specific inclusions in the amount, and 15.2 talks about these amounts that have to be included. One of them is subsidies that are directly linked to the price. And the only exclusion from these subsidies is the subsidies that are being provided by the central government and the state government. So our apprehension under this provision is that tomorrow the department might say that these subsidies are in effect reducing the price of your goods, these discounts and incentives that you are providing. And so in effect, these are nothing but subsidies that are being provided, and they must be included in the value of your supply. Second, the concerns that we had under the negative list regime with declared service is brought into the GST regime also under Schedule 2, which talks about what are supply of services, and one specific entry is that agreeing to the obligation to refrain from an act. That is identical to what we had under 66E. So the allegations which we can expect under the GST regime will be very identical by treating these as supply of services that are being provided by the dealer to the manufacturer. Now, to assuage much of the apprehension that is there around the GST, implications of GST on these transactions, as Puneet was explaining what are these reimbursements and what are these incentives that are being provided, you must have understood that these are nothing but discounts, and discounts are discounts no matter what the nomenclature is. And if you come to the valuation provision under GST, the GST now very specifically deals with post-sale discounts that are being provided. And there is a specific exclusion to this extent. It says that under 15.3, it says that the value of supply shall not include any discount that are given after the supply. The only conditions for these are that the discounts and its terms have to be established in the agreement between the supplier and the recipient, and they have to be specifically linked to relevant invoices. And of course, the recipient of the discount must reverse the attributable ITC to this effect. So, by our understanding, in most of these cases that are coming up through these, that are being undertaken by our dealers here, are that these terms and policies of the incentives and discounts are very clearly articulated in the agreements that are being executed between the manufacturer and the dealer. There is no concern as to what are the specific terms. And so if this 15.3b is being qualified, then in our opinion, there should not be any apprehension that the department or the department's allegations should hold no water by treating these as subsidies. We also have to keep in mind that there's a very clear demarcation between subsidy and discount. There's a specific exclusion. Subsidies have been specifically included, and discounts in a subsequent provision have been subsequently excluded. So the department should not confuse itself between what constitutes a subsidy and what constitutes a discount merely by the nomenclature that is being given to the incentives. Lastly, we should also not forget the first principles, and that is anything that is a part of the value of goods or value of supply of goods cannot form value of service. And this is articulated in the very definition of the word service. That is, service means anything other than goods. If we see all these discounts, all these activities, alleged activities that are being undertaken, these are nothing but conditions of sale that are being undertaken, even between the manufacturer and the dealer and the customer. So at no point is any service being provided. Even carrying forward or passing on of reimbursements, passing on of discounts is nothing but a part of the sale activity that is happening between the dealer and the customer. So there is no separate service activity that is being undertaken. So we should not forget the first principles, and we should always understand, even under the GST, the implications by taking hold of these first principles of law. Now, moving on, we should also, there have been certain clarifications that have been issued by the department through various circulars, and we'll quickly go through them. The first one was a March 7th circular in 2019 itself. It talked about secondary discounts. This was nothing but a reiteration of what 15.3b said, that if the value of the discount is not known at the time of supply, then it will be included in the value of the supply. This was further expounded upon in the circular issued subsequently in June 28, and the department here came up with various scenarios and how what would be the GST implications. The first one was a very simplistic case where there was a post-supply discount given by the manufacturer to the dealer, but the dealer has no obligation to undertake any activity. In this case, the revenue's understanding is that this is a discount relating to the original supply of goods between the manufacturer and the dealer, and if the conditions of 15.3b are satisfied, then there will be no addition of this amount in the value of the supply. Second, this is a little concerning, is that post-supply discounts with an obligation on the dealer to do some activity. But what are these activities? The circular very clearly says that these activities are in the nature of conducting sales drive or undertaking specific advertisement activities. Here the department said that these sales drive, advertisement activities, these obligations that are being undertaken by the dealer, they will constitute a separate supply of service and the dealer is liable to pay GST in this. Lastly was another scenario that the discount is offered to reduce the price for the final customer and this in turn increases the sales. Again, this was held, much to our dismay, to be an amount that is includable in the value of supply between the dealer and the customer. Mostly because the definition of consideration does not necessarily mean that consideration always has to flow from from supplier to recipient. It can flow from a third party also, here being the manufacturer. But much to again our fortune that the department realized something and they withdrew this entire circular 105/2004 of 19. They withdrew it ab initio, that is from the very beginning, as if it never existed. So the current understanding, we can say the department has again reverted back to the current understanding, to the old understanding, is that under 15(3)(b), if your discounts are post-supply discounts, which are known at the time of supply, then they will of course not be included in the value of the supply. Now, as we know, the GST adjudication is still in its nascent stage. So what we have as guidance to understand the interpretation of the law are only a handful of advanced rulings on this issue. And we'll take you through all these advanced rulings. The first one is an advanced ruling which favors dealers much. This is a Karnataka advanced ruling in the case of Quality Mobiles Private Limited, a very identical case where it was a case dealing with automobile sector only. The automobile manufacturer was providing incentives and discounts to the automobile dealer. And the nature of these discounts were volume discounts or target linked discounts based on the number of purchases and sales undertaken by the dealer. Of course, the discounts were forwarded to or given to the dealer through credit notes. The ruling here, the authority observed that everything else apart, this does not form a service. So the authority very specifically addressed the apprehensions that we are having under the GST regime, that will these activities, will this discount be considered to be in lieu of any service being provided, maybe a service of obligation to undertake an act. The authority very clearly, categorically held that these are nothing but discounts that are being provided and they do not form any service. Consequently, it was held that these are not includable in the value of supply of cars. Second, we have again a few ruling which came out a few weeks ago. This is the case of Santosh Distributors. Here also similar incentives were being provided in the nature of reimbursements. That is, the manufacturer asked the dealer to reduce the price or to sell at a prefixed price to the customer, and any subtraction would be reimbursed by the manufacturer. These were again, the reimbursements were provided through credit notes. The observation here was that this discount or this reimbursement that is being provided only on the direction of the manufacturer. The dealer otherwise would not have provided these to the customer, and this is only to augment the sales. So again, it was held much to our dismay, like it is being held in the current regime, that these are includable in the value of supply between the dealer and the customer. Lastly, we have the judgment of this ruling in the case of Ultratech Cement. Here also the facts were that cash discount, quantity discount, rate discount was being provided, and the question was whether rate discount should be included in the value of the goods. The authorities noted that all these discounts were very clearly stipulated in the agreement between the manufacturer and the dealer. Only say rate discount, which was not clearly provided, and it was left to the discretion of the manufacturer. Even though rate discount was mentioned in the agreement, the criteria as to why and when it will be provided, what is the rate or percentage, was left to the discretion. Only on this basis, the ruling observed, even though it observed that in case of cash discount, quantity discount, these are not includable in the value, But just because rate discount is not very clearly specified in the agreement, it will be included in the value of supply under 15(3)(b). Having given you a brief overview about how the entire transaction and how the department might proceed under the GST regime, I'll now hand over the session to Puneet to inform you about the best ways in which you can prevent yourself to fall into disputes and also prepare for litigation that is coming up.
Thank you, Sneha. So, as all of us have seen that GST was supposed to be a simple law and should have put all such controversies to rest, but that is not happening. The underlying transaction remains the same. The car company sells car to a dealer and gives discounts. In many ways, the law also remains the same because the law treats motor vehicles as goods and any activity as service. So it is likely that the authority stand will also be the same. So if in the service tax regime they are treating as an independent service, so in GST regime also they can contend this. It's very unfortunate that the law should have clearly provided what does a subsidy means, despite having separate provisions for discounts and subsidy. There is no clarity what does subsidy mean. We saw an advanced ruling where a totally new dimension has been added to the issue. Instead of treating it as a service from dealer to the car company, which in any case would have been creditable, they are treating it as an additional consideration for the dealer, which will effectively increase the tax incidence. The government issues a circular, withdraws a circular, which is totally meaningless. Circular is supposed to clarify the law, not lay down any law. So in our view, issuance and withdrawal of circular is totally meaningless. We need to see the provisions of section 15 only to decide whether this should be subject to tax. Our view continues to remain the same, that this transaction is an integrated transaction of sale of goods. But yes, based on these circulars and advanced rulings, we expect the authorities to continue to litigate the issue. So way forward from our side is that the department has been issuing the service tax show cause notices, because now if a dealer ends up in paying service tax, it will become an extra cost because the car company will not get any credit. So a factual analysis needs to be undertaken on different types of discounts and reimbursements, as we highlighted that if these are discounts not relatable to sale of goods like balance scorecard, or if these are reimbursements for advertisement activities, etc., service tax may become applicable. We need to clearly align ourselves with the main company as to the schemes and discounts and what sort of submissions and explanations we are giving to the authorities. So we need to put correct facts on records. Very important to note that under service tax laws, you need to put correct facts on record at the first stage only. Subsequently, the appellate authorities or tribunals may not permit you to add new factual or legal grounds. And yes, the issue needs to be handled with proper care because it's equally relevant in GST regime as well. The last slide from our side is that because number of you are vehicle dealers, etc., so it is useful for you to know the various stages in litigations as well. So if the show cause notice is below 2 crores, it will be adjudicated by an officer below commissioner. If it is above 2 crores, the matter goes to the commissioner. You need to file a reply to show cause notice, after which an order in original is passed. If the show cause notice is adjudicated by an officer lower than commissioner, the matter goes to commissioner appeal. You need to file appeal within 60 days. You need to make a pre-deposit of 7.5% of just the tax amount, not interest and penalty. If he decides a matter against you, he has to pass an order in appeal. You need to file an appeal in tribunal within 3 months and make another 2.5% pre-deposit. If the matter is adjudicated by commissioner, the matter straight away goes to the tribunal and you need to make 7.5% of pre-deposit. The tribunal will pass an order which will be appealable straight to Supreme Court and not to High Court. Based on our interactions with various dealers, etc., few dealers were inquiring from us, should we file a writ petition, etc. So please keep in mind that the writ is entertainable only if you don't have any statutory remedy, because here, if a show cause notice is issued, you have a statutory remedy to file a reply before adjudicating authority and take it to Commissioner Appeals, Tribunal, etc. So a writ may not be entertained. So with this, we come to the end of the session, and we have many questions being asked, and we'll take it one by one. So we have Mr. Venkat Ramana from Autofin Limited. We have Mr. Pradeep Kumar Roy from Silveran Motors. We have Mr. Rajesh from AM Motors. We have Ronald Pereira from Hercules Automobiles. We have Varun Shukla from BCH Electric. We have Antariksh Mishra from Patel Motors. We have Rudra Dev from Orbit Motors. All of you have one generic question. That's why I took all of your name together. Is a GST impact on post-sale discount? So, as we explained in our presentation, that in our view, this should not be subject to any GST at all, except in situations where these are for identified activities or reimbursements of sales promotion, etc., done by you. Then we have question from Mr. Ritesh Jain from Barbate Automotive. Applicability of GST on balance scorecard payouts, spares target achievement, accessories target achievement. So, Mr. Ritesh, for spares target and accessories target achievement, I understand that this is linked to the target or the quantity taken by you. So these should be outside the purview of GST. But yes, the balance scorecard, if it is not directly relatable to sale or purchase of goods, then it should attract GST. Then we have question from Mr. Manoj Sharma, whether the judicial authorities raise demand or objection in GST on the same grounds as mentioned above as a subject matter. Yes, Mr. Manoj, they are likely to raise these demands in future as well, but these may not be tenable. And lastly, we have question from Mr. Rudra Dey from Orbit Motors. The question is BSC payout, NSC payout, True Value Achievers Club payout, amount shown in sub-ledger but credit note not received as this payout are income and without treating GST, how we adjust in our books of accounts. So Mr. Rudra Dev, firstly we need to identify which of these payouts are relatable to sale of goods. If these are relatable to sale of goods, then this should be reduced from the purchases only at year end. This should not be treated as other income. But yes, if these are not identifiable to purchase of goods, you can treat it as other income and GST implications may also arise. With this, we come to the end of the session, and we again thank you for joining in that large number. Yeah, thank you.
Thank you so much.